president for Gladstone, and he's based out of Florida, right? So Tampa, Florida. So, he's been doing this type of work since 2007. He's going to give us a rundown of how this works, why it might be appropriate for some of your assets, and also explain, what a non-traded preferred stock is, and just kind of an overview of everything, and then we'll take questions as well. So this can be conversational, and if you have any questions, I'm sure you'll be happy to answer them. So I'll turn it over to Mike.
Thanks, man. Appreciate it.
Yeah.
That's open-ended.
Well, the folks online don't know we've already met. So how's everyone doing?
Hey.
Hi, excellent. All right. So as Daniel said, my name is Michael Kerrigan. I'm what they call a wholesaler in this industry. And what that means basically is I represent my company, which is Gladstone Securities. And Gladstone is a securities company. So I travel around the Southeast, and basically my clients are financial advisors. So I spend the majority of my time talking to wealth managers and why this is a great investment, why farmland is a great asset class, and just anything that really comes up with investing, specifically with non-traded preferreds. Okay, so 10 states is where I travel. So again, my clients are advisors. Sometimes I can do events like this, which is nice. Now I'll warn you, I do talk fast. I try to slow it down, but it just is what it is at this point, like my hairline we talked about. So if you miss something or if I talk too fast, just stop me. It's interactive. I don't want to talk at you the whole time, but it's a really fun asset class talking about farmland. So real quick, I'm going to cover three things. I'm going to tell you who Gladstone Securities is. I think it's really important, the company that's behind this investment. Talking about farmland, and then we'll really just kind of sum up why it's an important investment for you all if you're looking for income backed by farmland. So for those of you who haven't heard of Gladstone, has anyone heard of Gladstone Securities? I wouldn't think so. Most people haven't. In the advisor world, it's a very common name, right? It comes up a lot. Because Gladstone, we have 4 public companies. All right? And I can give you the tickers if you want to look them up. They're publicly traded. We're going to talk today about Gladstone Land. LAND is the ticker. Punch that into a Yahoo Finance, Google Finance. You can look at what we've been doing since 2013. Now we manage 3 other funds. We manage another public REIT, which is Gladstone Commercial. GOOD is the ticker. And we manage 2 debt funds, Gladstone GLAD and Gladstone GAIN, GLAD, GAIN. So you can look what we've been doing publicly with our investments going back to 2001 was our first listing. In that time with all those public companies, we've listed 14 preferred securities, which is not a public company, it's a position that's part of a public company. And that's how this works too with here today. I don't get too far in the weeds, but we're a securities company. That's what we do. So, but back in the late 90s, David Gladstone, that's where the name comes from. By the way, my firm, we're out of McLean, Virginia. I live in Tampa, but strategically located to service the Southeast. But we're out of McLean, Virginia. We're a very conservative firm. But David Gladstone started the firm. And what happened was in the late 90s, he bought a farm in California. Because if you look at David's resume, it goes back to the 70s. I mean, he is one of the smartest guys I know in the business. He's a credit debt guy. His first listing was a public debt fund, right, where you go out and lending fund. But he bought this farm. He didn't know what to do with it, right? He bought it from a friend. It was in California, Southern California. And so he held on to it. He's like, I know there's a lot of value there. He didn't know what to do with it. Until finally the light bulb went on in 2013. He's like, well, why isn't there a publicly traded farmland? Like, why isn't there, right? And so that's how this whole thing started. With the buying of that farm, holding on to it, and then eventually he listed, and that's when we started Gladstone in 2015. That's the first publicly traded farmland. So before we get too far into it, I'm going to talk to you about the structure of our investment so you understand how it works mechanically first. We'll get that out of the way and how it works, right? So this offering is a $500 million offering, right? So we've been raising money since COVID hit. My first day at Gladstone, I went right into a lockdown. It's pretty awkward as a wholesaler when you're supposed to be out and you're sitting in your desk at home. Not good. But anyway, we've been doing very well since then. We've raised almost $200 million. And my guess is we're going to fill this thing up in under 2 years. So this thing will be completely subscribed. It's a guess because we can't go beyond June 1st, 2025. This thing shuts down. Whether we raise all the money or not, it's done. We close it down, right? But it's a $500 million offering. The share price is $25. We pay a 6% dividend. Okay, 100% of your money goes into investment, and we pay a 6% dividend off of that money. Minimum investment is $5,000. If you need to exit early, you can exit at a $22.50 share price. It's not designed for that, but what happens where you need to get out of investment, there's always liquidity. You can always leave, but there is a little bit of a haircut because there's costs associated with what we do, right? Again, not designed for that. We're eventually gonna list it on exchange like we did our last offering, but I'll get into that in more detail. But 6% dividend, and of course, there's commission fees and expenses. You all don't pay that. We pay it. Well, actually, technically, our common shareholders pay it. So we have a public company. We create a lot of cash flow from the farms that we own, and they're the ones who pay cost of doing business for our common shareholders. So if you owned our common, you'd be paying fees and expenses. So that'll work. By the way, questions? Raise your hand. Happy to answer them as we go. So here's where we are today. Actually, we just bought a farm, I think it was last week, but we own 165 farms in 15 states, right? And again, the portfolio value, our acreage, actually, this is actually a little bit off now. We keep adding farms. We had anywhere from 20 to 22 farms a year, right? We're a public company, so we have our quarterly filings. Everything we do is transparent, right? So there's no secrets what we're doing at Gladstone Land. Inflation, I think this is somewhat misleading as it relates to my investment. Farmland is an inflation hedge monster, but as it relates to what we're doing here, not so much. And I'll explain how that works mechanically. But there is inflation hedge with farming. Fire away.
And in the farms you own being farmed?
Being farmed?
Yeah.
What do you mean? Are they empty? Like, what
Are
do
they
you mean?
growing corn? Or
Oh, I'll tell you all about that. Yeah, definitely all of them are farmed. Real simple since you asked. So what we do, simple strategy, we go to tenant farmers. We say, Mr. and Mrs. Farmer, we want to buy your land from you, but we don't want to farm it. At Gladstone, we are not farmers by any means, right? So we want to lease it right back to that farmer. Long-term lease structures, 5 to 10 years. We let them farm. We just want to collect the rents. That's simple. Okay, so yeah, all of our farms are 100% leased up. We don't have any issues with our tenants whatsoever. Even during COVID, we didn't have any issues because the reason why is 90% of our farmers distribute their products in grocery stores. So that wasn't all toilet paper you all were buying during the pandemic. You were buying stuff that our farmers grow. I guarantee.
So there's no helpful direction for what they're gonna farm.
Would it be helpful direction? No, we
Yeah,
buy
you
a
have-
farm. No, we
You
know
buy
what
a
they're growing.
farm and you go, these are the type of crops we expect you to grow.
We'll get into that. I should
Okay.
speed up. Yeah, I'm
Okay.
spending way too long with the
Okay.
boring stuff. I understand. Dividend coverage though is important. Daniel asked me to bring this up, right? So dividend coverage means for every dollar we pay out on the preferred side, how much do we bring into the company? And now it's actually, this number is a little bit higher now. It's 2.49 times what we pay out. That's what we bring into the company, right? So we have healthy cash flow coming off these farms that are being farmed by our tenant farmers. So real quick, I think we already kind of covered this going through it, but again, we're looking for good quality farms in certain areas. Now here you go. There's another slide after this that will really break this down. Farming industry is a big industry. It is a huge industry, right? I mean, you mentioned catfish farm, I mentioned catfish farmers, cattle, but really in the farming side, you're talking fresh fruits, nuts, and vegetables. We don't buy every type of crop. So typically when someone has an opinion of farming, it's typically a farm that we're not buying. And really what I mean by that, you guys all mentioned it, corn, wheat, soy. That's our tertiary focus, meaning we don't buy it. And the reason why is a complicated crop. And there's a slide that we'll get into that, but it's a complicated crop, but really if you boil it down, we're just not getting the cap rates, we're not getting the income off those rents that we can find in the other two areas. So what we buy is annual produce and permanent trees. Okay, so annual produce, think of a strawberry, think of your leafy greens. Basically the farmer plants his crop annually, his or her crop annually, they get 1 or 2 growing seasons out of it, they till it under and do it again. Best example of that is a strawberry. Believe it or not, strawberries and pistachios are the 2 most profitable crops that are out there. Now on the permanent tree side, there's no cotton. I know you got a lot of cotton around here. I drove down side roads with my son from a conference and we were to pick cotton off some of the trees just for the fun of it. We better go before we get shot, but just to show them. But we don't have cotton. So believe it or not, it's heavy on the nut side. So 22% of our revenue comes from pistachios of all things. Now pistachios are an amazing crop because there really is no in life to that tree. Meaning, there's trees, the pistachio trees in the Middle East that are producing for 300-400 years, right? So it's a great crop. We love it. It's very durable, and as long as you feed it, give it good nutrients, it'll always produce for you. So, but again, think of us annual produce, permanent crops. So permanent trees. We're not buying commodity crops. Corn, wheat, soy, you just don't touch it. So that means we're not going to be in every state either, right? If you go to the Midwest, I mean, there's corn as far as the eye can see. Why do you think that is? The farmers need that to be profitable. Why do you think they have grain silos? They have to store their goods, waiting for the right commodity pricing. We didn't want anything to do with that. Just we want more predictability. So that's why we focus in those 2 areas. Now, why is this a good investment? You want to know why farmland's a good investment?
You're not making any more of it.
Yes, sir.
They're not making any more.
That's right. That's right. And it's a shrinking asset class, to your point. So what's happened even during pandemic, populations continue to rise, right? There's more people consuming now than ever, right? Even through the pandemic, populations went up. And what you're finding though is you're having less land to farm, right? California specifically, regardless how you feel about California, you gotta talk about it, I know. But California loses 50,000 acres a year of farmable land to develop. It's happening all over Georgia, it's happening all over Florida. Just there's less land to farm. And it's not like there's Chicken Little, like, oh my gosh, we're not gonna have enough farmland. No, but it's a perfect supply demand imbalance where we know that our stuff is always gonna be in demand. But it is also because 90% goes into the grocery store. Right? Now this is a better breakdown of what we're buying, right? So we buy in the top two categories. Okay, annual produce, there's a lot of different things that you can associate with annual produce. It can be your lettuces, your cabbages, your beans, things of that nature. I focus heavily on strawberries because, believe it or not, we own a lot of strawberry crops. I don't know the exact number, but it's a lot. It's a lot. I mean, just outside of Tampa, anyone ever heard of Plant City? Yep. Yeah, there you go. We own 5 there, 5 strawberry crops. Owned by Driscoll's. Anyone heard of Driscoll's before? Yep. If you go to Publix, Costco, they're everywhere. Whether it's organic or non-organic, we own it, right? Or we own their farms. We also own a farm. We own a bunch of farms for Driscoll's in California, believe it or not. Driscoll's is worldwide. I mean, literally, if we toured one of their farms in Oxnard, only one person touches the berry, or the strawberry, right? The picker. Because they still use picker, even though automation is a big deal in farming. It hasn't completely reached all sectors of farming. There's automatic pickers for strawberries, but Driscoll still uses pickers. That one person touches it. Now, on the annual produce side, once you pull whatever you're taking off the plant, you have to cool it within 24 hours, right? If you don't, you're going to lose your crop. And it needs to be in the grocery store within a couple of days because you only have about a week shelf life on that. But if you don't cool it, you're going to lose it right away. So, but Driscoll's will literally, the picker will pick it, and it can be in Southeast Asia in 2 days. I mean, they do $7 billion a year. So that is one of our top tenants. But also on the permanent crop side, I mean, we own almonds, we own citrus in South Florida and Southern California. I'm going to bring up California a lot. We'll address some of the issues that you hear in the headlines outside of the political stuff. Droughts come up, and we'll go through that in a second. But citrus is an amazing crop because if you're a citrus farmer, Coca-Cola will buy anything. There's just not enough of it for their drinks. So you know that, if you can't sell your stuff, Coca-Cola will take it for sure. But again, that also includes almonds. We own blueberries in Oregon, New Jersey, Michigan, Georgia. We just bought a farm here in Georgia. We only own one here in Georgia. It's a blueberry vegetable farm. Bought that in last year. And there's one other state I'm missing, but blueberries are a great crop as well. So, but again, we're not buying down here. And I really just boil it down to just we're not getting enough money. We won't get enough money off those farms. Those farms are tough. So what do we look for, right? So when we go out and buy a farm, location matters, right? So the first thing we look at is, okay, what does the water look like, right? So we're going to buy a farm, we test the water. We want good, clean, quality water, very important. And we maintain testing as we go along, especially if we see issues with the crop. We need to look, okay, what's going on with the water? Because we're managing our real estate. We also want good, clean dirt, if that makes any sense. By the way, you know that listeria issue on spinach a couple years back? Does anyone remember that? It wasn't our farm, but that was bad groundwater. That's why it matters, right? A lot of sun, so that's why we're not going to be in every state. We're not in the coldest states, the Midwest, northern U.S. That's a lot of commodity crops. So we're not going to be in every state. And then location matters. And this goes back to the pandemic, where during the pandemic, we didn't have any issues. Actually, our farmers had windfall years, right? Because again, that's going into grocery stores and grocery stores just crushed the amount of volume that were coming in there during the pandemic. Now, I'll admit, if our farmers distributed to amusement parks, to the hotels, restaurants during the pandemic, they would have been a struggle for them. It really would have, but we didn't have any issues whatsoever. 100% of these things. So this actually, it says investment focus. Yeah, it says investment focus. I would say actually this is why we do a commodity crop, right? So this talks to you about why we're not buying corn, wheat, soy. First of all, they make country songs about it. I say it all the time, praying for rain. Like we know where our water comes from. All of our farms that we buy have well water moving forward, right? By the way, we do have some commodity crops, but we've been buying farms since 13, right? So when we first started, 5 years, we were buying commodity crops all the time. But then we kind of figured out the secret sauce, and there's better deals in the annual produce and permanent tree side. You guys good so far? I'm cranking. Good. Price volatility, right? First of all, water access, right? Farmers don't know if the rain's going to come. It's a big deal. And we didn't want that. We didn't want to deal with that non-predictability anymore. Price volatility. Typically, when we're making a deal with the federal government, with China or whatever country it is, doesn't matter. Hey, it has to include so much corn, so much soy, right? It's a big hot button item. We didn't want to deal with that. That's what government dependency is. Storage cost is a big issue. Again, grain silos are there because it's commodity pricing, right? They're waiting for the best price in the markets. And we didn't want to deal with that part of it. And then rents. That's really what it comes down to. We would put up with that a little bit more if we were able to get the rents, higher rents. But right now, if you guys know cap rate, if you know what cap rate is, about a 4 to 4.5 cap. It's just not enough juice in the deal, especially not now with interest rates going up. So here's what it looks like, just kind of boxing it in. I'm going to point here even though I'm not supposed to, but location matters. It's a big deal, right? So that's why we're not going to be in every single state because these the types of crops that we're buying just aren't in every single state. Annual produce permanent crops, I talked about transaction size. These are large farms, right? Keep in mind, we're not dealing with small mom and pop farmers, even though the majority of farmers are still private farms or privately owned. These are large farms, right? These aren't going to the farmer's market. These are large farm families, right, that we deal with. So with established operations for a pretty long time. Lease terms, that's our sweet spot, 5 to 10 years. Reason why is from an accounting standpoint, it's great. But keep in mind, all of our real estate is what they call triple net lease real estate. Anyone know what that is? What?
Where you basically include everything into the rents and you just increase it by percentage.
Yep.
See, that's why I brought her to
Yeah.
listen.
That's right.
I'm in commercial real estate. So.
Yeah. And so everything's included, which means the farmer has, and what do we mean by everything? Taxes, maintenance, insurance. That is a responsibility of the farmer, right? Think about that. We're not going to pay the taxes of the farm that the farmer should be paying, right? The maintenance on their equipment, maintenance on the property, well, it's just dirt. But that could also include their equipment, things that are on the land there. We don't pay that. And the taxes, maintenance, insurance. They're insured. They are so boxed in from an insurance standpoint because we've required that. Whether it's crop loss insurance, whether it's employee insurance, whether it's equipment insurance, they are responsible for maintaining that. That is their
It's
responsibility.
basically lease, not rent.
What's that?
It's basically a lease, not a rent.
What do you mean by that?
Rents are usually all inclusive. They want to make sure that there's no loopholes.
Yeah.
And if anything happens, whoever owns the property has to manage all the taxes and
Well, it just depends. It depends on the type of property.
insurance.
Well, it depends on the type of property. Like if you go to Walgreens, that would be an example of a triple net leased commercial real estate. Walgreens would be responsible for taxes, maintenance, insurance. Our farmers are the same exact
But
way.
I thought that was the difference between rent and lease. Lease is basically, we'll kind of leave you alone, but but you have to fill all the buckets to make sure that your business is successful. For renting is,
I'll buy that. Sure. I don't see a difference between the two, but I'm sure you seem smarter than I would be regarding that, so we'll go with that. I don't know exactly.
well,
The
the
difference between the
easiest
two.
way to do it is if you look in between house rentals and house leases. Most people like house rentals because, oh, things aren't working, come fix it.
Oh, I see.
On a lease, it's like, oh, it's not working, oh crap, I gotta go fix it.
That's good. I'll bubble that up to my higher ups and say, we call them rents, but I mean,
Okay.
they are leasing it then in your way, in the way you put it. Yes, for sure. Yeah. But it does say rental payments. We'll call it lease payments, and then we kind of covered that spot there. So, again, large farm families, anywhere from $2 to $50 million on property size, long-term lease structures. We call them lease structures. There you go. Long-term lease structures, right? 5 to 10 years. Could be longer. I've gotten questions like, why don't you do a 20-year lease with a farmer, right? If they're not going to go anywhere, because we don't want to displace our farmers. That's where we get our income from, is the rent. Now, in some cases, we have participation, meaning we get the rent, maybe a little bit less rent, but we also have participation in the crops they grow. And that can be really good money, right? As far as what we do. But at a minimum, we want to collect the rents on that, and they pay all the other stuff, the taxes, maintenance, insurance. So I love this slide. This is kind of breakdown of where we are, right? As far as what we own. Again, we're up to 165 farms. Our last farm we bought was in California. By the way, California, let's talk about California for a minute. Are you okay with that? Yep. Just for a minute?
Just 1 minute.
Okay.
That's 60 seconds.
All right. So California is the farming mecca. It is. I mean, they're in the 90th percentile for everything grown. I mean, they are definitely the U.S.'s food basket, but also known as the world's food basket, right? So if there's any kind of industry changes that take place in California, it typically starts there and then is exported across the world, right? So you can't not be in farming and not be in California, if that makes any sense, right? So California is the farming mecca, but what are we hearing about California from a farming perspective? Anyone know? Droughts, right? Drought's a big issue in the West, right? And so let's talk about that, okay? So if you're a farmer in California, first of all the farms you buy now, they have well water, right? So we know where the water comes from. It's well tested, and we know what's going on with the water. But if you're a farmer in California and you've got 8 wells, right, that is considered one source of water. Well, if you're going to put any kind of mortgage or insurance on your property, you have to have 2 sources of water in California, right? So a lot of what you see in California is the one source farms are struggling, right? Maybe they didn't dig their wells deep enough. Believe it or not, I still have family there. We talked about this. But my brother lives, he has well water, right? He lives just outside Palm Springs. His well is 480 feet deep. He ran out of water. Right? Ran out of water. Yeah, it's like just because it's further down, right? His neighbor next to him, I believe he told me it was either 600 or 700 feet. Not much difference. And his water's just pumping out. And he's like, crud. So the problem is for my brother, right? You can't just dig that well deeper. That well's done, right? Unless the water moves back in and starts working again. Great. But if not, he's got to drill a whole new well and go deeper, right? But anyway, all the farms we buy have well water, right? So if you're a farmer and you have 8 wells, that's considered one source. The second source of water, and by the way, we only buy 2 source water farms, is typically it's a credit system with the municipalities, where when it rains in California, these local municipalities can literally fill up the aquifer, right? They can fill up these aquifers in the ground, and if you have credits, you can go pull up water off those aquifers as your second source. So I'll give you an example. We bought an almond farm, right? Late last year. It was a 3-phase close. This farmer had 8 wells on the property, but he had 45,000 acre feet of water as a second source. Right? Anyone know what an acre foot of water is? You shouldn't. Yeah, it's like you shouldn't. I didn't know until I Googled it, but it's 300, just shy of 325,000 gallons, right? So this farmer literally had roughly just shy of 14 billion gallons of water as a second source, but he had never used it. And that's where the light bulb went on at Gladstone in McLean, Virginia. David Gladstone's like, wait, we want to buy the farm, but we actually want to own the credits. Not the credits for the farm, but we want the rights to that water. And so it was great because we negotiated with the lender, the insurance company. We ended up, we bought the farm, but we ended up keeping 15,000 acres with that farm, right, for that farmer's protection for their requirements. But the other 30,000 acres we own. Well, literally, we can do whatever we want with it. Whether we sell it in the open market, because you can make a lot of money on that, or whether we give it to our farmers, help them out if there's ever an issue. We've never had issues like that, but it's there. But anyway, but it's owned by our common, LA&D, it's owned there, right? So if we ever sold it, the common shareholders would benefit from that. But we own a lot of water, 14 billion gallons, and plus we're only buying 2 sources of water farms, if that makes sense. Now, you know what's here? If you know where if you know anything about the Colorado River, this comes up a lot, right? It doesn't go here, right? Colorado River comes down here and eventually goes into Mexico, right? And so Mexico actually has rights to the river too. We can't just suck it all dry and give them nothing, right? Because this goes back hundreds of years, right? So we don't have any farms that pull off the Colorado River, nothing off of Lake Mead, nothing off of, what's the other, Powell? Yeah, they're pretty low. But also it's part of the cycle in the West. I did come from California, spent 32 years there. I mean, back in 2018, the levees were overflowing, right? So it's part of the cycle because it's a desert. I mean, it really is a desert. It's a desert. So it's starting to feel more tropical these days because it's a little more humid there these days, but still. So we don't have water issues, right? Our farmers don't. And if we do, we own water, but we also buy good quality farms with 2 sources of water if that comes up. Any questions? Yes, ma'am.
I'm trying to figure out what is the impetus for these farmers to sell it to you guys? You say it's triple net lease, so they're still responsible for all of their expenses.
Mm-hmm.
You're taking what was an asset of theirs owned by the family that they owned and bought it from them, and you turned it now into a liability because they are beholden to you for a lease.
Yeah.
So what are the farmers getting out of it? Now they have land that they can't do whatever they want with it. So what are they getting out of it?
Yeah. And I would say, well, there's a lot to that question, right? Because if you're a farmer, their first inclination is maybe not to sell to us. It's generational farming, right? Mm-hmm. Generational farming, they want to pass it on down. I mean, that's kind of the old adage in farming, right? Well, that is definitely being reduced dramatically, right? because you're seeing generational farming going away because farming is a hard business, right? So number one, they would go to family, right? But typically when someone wants us to buy a farm, Driscoll's would be a good example, where I call it like a business partnership, where if we're gonna go look at a deal and Driscoll's is there, well, we're gonna kind of defer to what Driscoll's wants to do. Do you want us to take the deal down for you, or do you want to portfolio it? It's up to them. But number one, also, from an accounting standpoint, you can write off your leases. Not the same that you can write off your mortgage, but also allows them, consolidation's a big issue in farming, where farmers want to grow. So we're giving them their largest percentage of their assets in that one piece that they can redeploy out and go out and do their business, whether that's improving equipment, whether that's running operations, or whether that's going out and increasing operations. Farmers are always looking to grow, always looking to grow. Very few want to sit stagnant. So it gives them an opportunity to do that. But also, if you're a farmer and you want to sell, you need to access capital, they're going to keep farming. They're not selling to go away. They keep farming because we're putting in the long-term lease structures, 5-10 years. I kind of lost my point there, but anyway, point is it gives them an ability to go out and increase their operations. Oh, but so we are another option for them to not sell to the big boys in the farming industry. Because typically, if you want to sell, you're going to one of the larger farm families to do that traditionally, right? Even though they continue operations, we're another option for them, which is a big deal. It is a big deal, believe it or not, the farming industry. But I say every situation is different and unique, right?
What about the succession of each of the farms?
Mm-hmm.
You know, a family enterprise generally goes through 3 generations. The 3rd generation being the sole generation. But what about the succession plan for each of the, because it's essentially you're buying family heritage farms.
Yeah.
So,
Meaning as far as like,
well, you own it the raw, you know, the actual raw asset, and then depending upon the existing structure that actually operate the farm, but you gotta have a succession plan.
good point. Yeah, well, so a couple different things. First of all, as far as a farmer goes, when we do a lease with a farmer, there's multiple renewals already built in, right? So if they want to continue farming after 5 to 10 years, and all of them typically do, or we would factor that into our analysis, they can continue to farm, right? We're a partner with them. And so when it comes to relationships with farmers and reputation, Gladstone, hands down, has the best reputations out there. You all heard of the Bill Gates Group, right? They're going out buying farms. You heard about that?
Yes.
Currently, Bill Gates, the largest private farm landowner in the U.S., 250,000+ acres. You all see that stuff with the with North Dakota. I didn't think he was going to get that done, honestly. I was like, I'll take somebody off.
Well, his goal is to control the global food supply chain. That's his goal.
Well, no, but also profit. That's the thing. It's control the food supply, maybe debatable, but definitely profit, without a doubt, because it's not Bill Gates going out there like looking at farms. It's his group. And so it came up at Driscoll's, and Driscoll's is like, yeah, we wouldn't even talk to Bill Gates or his group for selling him because they know that it's not a partnership. They know they're out for a buck. Whereas our reputation as Gladstone, they know we're a good landlord and we're well trusted and well respected in the industry. But something like Bill Gates, no way. So we don't even run across him in his group ever. But they're also buying a different type of crop. So did I answer your question though?
No.
Fire away. Let's do it again.
Yeah, because I'm thinking, you know, that there's an existing farmer is comfortable with it, he may want to grow. But if there's not and he's got the expertise.
Yeah.
But if there's not a plan for succession.
Oh, as far as
to continue that, then that appears to be an inherent risk to the REIT.
You'll be out of the fund way before.
Well, no, to your point though, good point. So in 2018, actually, because we haven't run into that, but you know, when it comes from a due diligence standpoint, we already know that. I mean, we're well ahead. We're trying to renew leases 2 years in advance. So if that farmer's not going to continue, we already know well before that lease is expired. But we actually had 2 farmers die in 2018. Our portfolio was much smaller back then, roughly 80 farms. And that was a big issue. And we actually, as Gladstone, tried to farm. That was a big mistake. Farming's hard. It's a hard business. And so what we do now on every single one of our farms, we have a short list of operators that are willing to take over operations. Because just like consolidation, farmers are always looking to grow. So it's not hard. It's not as hard as you would think. Let's say you have a commercial building, right? Well, getting someone to fill that building is a lot more difficult than it is to find a farmer who's willing to take over and plow dirt, essentially. You know, So, and if it's a big issue, then we sell it, we haven't had this, but I mean, the reality is we could just sell the property and just move on, right? Because you're selling dirt, way different than a physical building. Not that there's anything wrong with a physical building, but farmland is just a more unique, it's a unique asset class when it comes to that, it's just dirt.
But I don't think it's a risk to the investor because the lease terms are so long and this particular investment has an exit strategy and will be out in a few years versus 5 or 10 with the, the farm lease.
Yeah.
So,
But- Yeah, but even more simple than that, it's one farm is not gonna affect the whole portfolio of 165 farms. That's the thing. So if we have an issue, one farm is not gonna affect what we do at a public company by no means. Operationally, we gotta figure it out. But as far as you receiving your dividend, and we'll talk about where you fit in our capital stack is really important. Because again, you're a preferred, let's just go through it. So in a company's capital stack, does everyone know what that means, capital stack? So if you're a public company, right, you have shareholders, correct? Well, who sits on the bottom of this capital stack? Meaning the lowest in the capital stack. It's your shareholders. Yeah. So you get all the growth, but you also get all the the negative stuff as well. So if you own stock, you're in the bottom of the capital stack. This is a preferred share class. So you sit on top of the common shareholders, right? But if you look at what Gladstone Land is doing right now, we're paying by the way, our share price has been on fire, but we also pay almost a 2.5% dividend. That fluctuates with price, right? But we pay a 2.5% dividend on roughly almost $1 billion in outstanding shares. So you have to eat through that dividend, 2.5% before you have any impact to the preferred share class. We are contractually obligated to pay you before we pay common. So we would literally have to decimate our common shareholders before we have any impact to you all. So I would say if a farm does have an issue, there's no way you would feel anything. You wouldn't even know because we continue to get dividend or revenue from other farms and we just fix the problem. Public company. But again,
That's San Joaquin Valley you're heavy into, right?
Yes, sir.
You probably own San Joaquin Valley.
there's a lot of farming there. How do you know that?
Because I was interested in that because about 85% of the perishable crop comes from that.
Yeah, so we're back to California again. So I grew up like right there in Rancho Cucamonga, California. But my parents, of course, a long time ago, I was 2, but my dad moved up here outside Yosemite. So I would literally, when I was, my younger ages, I would have to drive every month up to my dad's house, which is the San Joaquin Valley, going from Bakersfield all the way to Fresno.
Yeah.
And this farm is as far as you can see.
85% of the canned peaches come from
I did not know that.
that. And 15% of those peaches is perishable market.
Okay. Yeah.
But in Georgia, we're reversed.
That's right though, the 85%, I'm gonna steal that. Okay, don't get me called out. Yeah, not surprising though. Believe it or not, some useless knowledge for you all. So does anyone know the Central Valley of California? Are you all familiar with that? It literally is a farming mecca, right? It's a valley, but you wouldn't know it because it's so big, right? But you get locked in by mountains, but it's, hundreds of miles long, all the way from like Bakersfield all the way to Sacramento. But even beyond that, they have farming that are going on. And it is a mecca, but it used to be a swamp. The whole thing was a swamp. Yeah, so that's why Bakersfield, if you know Bakersfield, that's why it was created, because it was the highest point, the 1800s, where you weren't the swamp. But eventually they drained all the swamp, and that's why it is just such a fertile valley. But it's huge, massive. Massive. So,
Y'all own a stake in Monterey Canning Company?
no, sir.
No.
I don't know that. Yeah, we have to have David on that one. I've never heard of that one, but so David's about ready to launch 2 more public. Say again?
The big cannery out there, they can most of your
Fruits and vegetables.
We're starting to think like David a little bit. So this fund is doing whatever we do. We go out and buy farms, but he's like, well, there's so many other resources that come off of farming. One of them is the cooling center. He's like, well, why don't I own the cooling center? Like, why do our farmers? Why don't they pay me for that? Sure, fine. Or candy. He mentioned applesauce the other day. He's like, Dole makes billions of dollars off applesauce. I start packaging applesauce. I don't know. Sure. By the way, so Florida, we have a lot of farms too. It comes up. That's our second largest state by numbers. I'm gonna come over in fourth. We have a lot of acres in Colorado. By the way, that comes up. Not many farms, 12, but a lot of acres. We do own some commodity crops in Colorado. We bought them. They're legacy assets way back when. They're great crops. They're great farms, but that's why it's so high. It's because we do own some stuff there. But we do own one farm that's interesting in Colorado. It's a potato farm, organic potato farm. And the only thing this farmer does is he takes those organic potatoes and he feeds an organic pig farm. That's it. Doesn't go in a grocery store, it goes to organic pigs, because you can't feed organic pigs, not organic potatoes. So far. Now, what's that?
Gotta have organic slop.
Yeah, exactly.
But does he treat his pigs nicely so he can sell the meat in California?
That's right. You gotta rub them every night.
Yeah, have to be very
Yeah, you
nice
gotta
to
treat
them,
them.
right
Gotta
before you let the brains out. And then feed them. But we have to be nice to them like we eat.
Sorry, I don't think anybody's waiting.
Okay, good. 5 minutes? Oh, I gotta go quicker. All right, sorry, we're having too much fun. Real quick, organic farming, okay, that's a hot button item, especially in California. 35% of our portfolio approximately is organic, but you can't have too much organic because when a recession hits, money starts to get tight for families. The first thing to go is organic, right? Go buy the cheap stuff, the Bogos, the Publix, right? You have a question?
No.
All right, perfect. I got speed up. This is what farms look like. So this goes back to our due diligence, right? This is where, this is really the expertise for David Gladstone. We do a ton of due diligence on the farm before we buy it. We look at the water, look at the soil. We test everything, right? We look at the zoning, we make sure that's good zoning. And then from there, then we do the due diligence on the farm, right? Their operations, their financials, how long they've been in business, things of that nature, right? So by the time we buy a farm, I mean, this thing's been worked over 9 different ways this Sunday. And by the way, we're buying great cap rates, which we're buying in the 6 to 9 cap rates, right? 6 on the annual produce, 9 on the permanent tree side. Permanent trees are extremely profitable. Expensive land, but very profitable from a rent standpoint. So we love permanent crops, especially pistachios. 22% of our revenue is pistachios. This, I think, goes back to what we were talking about earlier. This is a misconception in farming. 86% of farms are privately owned, right? Might be large farms like Driscoll's, but they're private, right? Or most people think, corporations are trying to fill us up with GMOs and all that stuff. No, it's farm families doing that. Just kidding. But here's, got a joke. All right. But here's the asset class, $2.7 trillion, right? So it's a huge asset class still, so it's a big opportunity for us. But farmers are getting older. That's the reality. But 40% of farms are already being leased out. It's already happening, right? In a big number. So it's just a huge opportunity for us to go out and buy good quality farms. This is the growth of our public company. This is IPO, just under $100 million. Today we said it's actually higher now, it's $1.7 billion. I mean, fund's been going crazy. The straight lines are acreage, roughly right around 150,000 acres now. So, and this is our dip right here. That's 2 farmers died back in 2018, right? So it had to hit on earnings for us. So we've kind of changed how we do our due diligence. Don't worry about that last one. It's just we didn't finish the year yet. But we're just managing a public company and doing it very, very well, I would say.
Okay, now you're not forcing farmers out.
Oh,
I mean, the
Choice.
farmers are happy because they're getting the money out of their land and leasing it back from you, and so then getting to still farm it. And so they're taking all the equity out of their land, give it to the kids or whatever.
no, I would say back into the business.
Whatever.
Back into the business. They're not exiting.
Equipment. and-
Yes.
Well, I know, but they're
Expanding
still getting
operations.
money, but they're getting money out of their land.
We give them all that wealth right into their bank.
That's what I'm saying.
Probably a little more.
That's what I said.
Yeah, you're right.
But they're getting their money. I mean, I was saying that would be the reason for doing it.
Yeah.
They're getting the money out.
Well, but why would they want to do that, right? So we're not forcing anybody, right? This is a decision that they have. And,
Yeah, I know.
yeah, no, you're 100% right. Yep. So how do we know the values though, real quick? So we value this. So we're a publicly traded company. REIT guidelines say you have to have that appraisal done every 3 years. We take an additional step and do a desk appraisal on the off years. So every 2 off years, we do that. So we know our values. Right? We keep track of those. And believe it or not, 2 source water farms in California have gone. Even though California might struggle with real estate, 2 source water farms are extremely highly sought after. Very important asset class. So our portfolio has grown. 100% occupancy there. Rent bumps built into our leases, right? 3.5%, right? So our rents escalate. We put that into every contract. So when it's time to, and it's based on prevailing market rents in the area. And it's time to move them up. We're not trying to gouge farmers. We're partners with them, but at the same point, rents are going up. So are ours. Capital stack. Okay, good. Making sure. Common shareholders right here. This is not you all. You all sit above, or our preferred, excuse me. Preferred would sit right here, on top of the common shareholders. So we would have to decimate our dividend that we're paying at 2.5%. We have to get rid of all that before you see any disruptions to the preferred shareholders. You guys have priority over the common shareholders. And then this is our bonds. Actually, we don't have any bonds. It's our debt. Roughly monthly. So, very important. But again, MetLife's still in business. I don't know, they got rid of Snoopy, but they're still in business. We have $500 million, $600 million credit lines with MetLife. We have, and of course, all the farm bureaus. So we have access to capital all over the place. And that's it. One thing I didn't talk about, you got one more minute? Yeah. Okay, if you don't mind. I want to tell you about an interesting farm here in Florida. Has anyone heard of the red tide in Florida? Yes. You know how that started? Anyone? Believe it or not, so it's man-made. We created it. We being
Is
Americans.
it supposed to be agricultural runoff?
Yeah, 100%. Well, but we screwed it up. And what happened though is early 1900s, there was a massive hurricane in Florida that decimated the sugarcane industry. Back then, I think it was like right around 1910, it was 40% of Florida's GDP. It's a big number, right? And so what happened was a flooding. And so what the Army Corps of Engineers did, they took all the water coming out of Central Florida, and as opposed to letting it go into the Everglades, they dump it into one lake, Lake Okeechobee. And that's your red tide, right? That's all the nutrients and minerals get loaded into one lake. Perfect environment for toxic algae bloom. Problem is, we'll actually find a red tide yet. But you got this algae bloom and a really important water source because right on top of the Everglades, so you have to do something with it. And that's what they do. They dump it in the oceans. 2 systems divert water. One's in Stewart, the other one in Fort Myers. They put it in the ocean. Well, the problem is now, what does it do? Well, it kills what is our number one GDP, which is tourism. You can't go to beaches, hotels aren't full, you can't fish. I mean, I walked along St. Pete Beach one time, and I mean, it was loaded with eagles. It's about 3 years ago last time I did it. So they designed water farming. So what they try to do is when that water's coming in to Lake Okeechobee, they try to pull it out as much as they can, and they put it on they put it on one of our farms. There's 7 total in Florida. It's called water farming, where we put in this massive resting ponds, 3,500 acre farm, and they allow it to sit, and eventually it goes into the aquifer, much cleaner, gets nutrients in the soil. So in the case for that farmer, he gets payments from the state of Florida to do water. If he stopped water farming, he can just flip it right back to the vegetable farm. No problem. No questions asked. So that's a unique farm. Anyway, with that, any questions? I appreciate your time. Thank you so much.
Yeah. Thank you so much. So, just real quick, the way that we position these types of investments in portfolios is the share price is stable, $25 a share. And so, did you tell them the timeline?
Yeah. Well, I can tell one there.
Yeah, tell them like when it will be listed.
I did, yeah. So, so we have until June 1st, 2025 to finish up the offering. I don't believe we're going to go that long, right? But I can't predict how much we raise, but there's a lot of liquidity right now. My guess is we'll get that raised in right around 18 months to 2 years. Once we raise the $500 million, we shut the offering down. It's done. And then on the back end, we have a year. We are going to list this. So this is going to be put up on an exchange, and that's your liquidity. You choose a timing of sale.
So a 2 to 3 year hold for this, and he mentioned it is liquid. You can get money out early if you need to, but the point is we like the stability you can provide for a portfolio in a low yield environment where you don't want to own bonds, for example. This is an asset class that's a hard asset. Farmland is secure, and so a preferred stock paid 6% can provide some stability in a portfolio today that you really can't really find that kind of yield with this kind of stability elsewhere. So we may use, 5% of someone's portfolio in a holding like this, and the share price remains constant at $25 a share, and you just get 6%. That's kind of how we position.
6% per year, paid monthly.
Forms, one of them's for preferred stock and one's for the REIT.
I'll take a look at them.
Sub-doc.
So
Yeah, I'll look at
you
it.
can buy the preferred stock directly.
Yeah, that's all okay, right? Yeah. The preferred is what we are using.
Okay, I didn't know.
Yeah.
And then
Well,
with the REIT,
Can I answer that real quick though?
Yeah.
So 3 ways you can purchase Gladstone land, right? And so work with Daniel in all these ways, right? You can own the common. Feel free to own the common. You get a 2.5 dividend. That's your choice. You can look at our traded stock, our traded preferred, which was $150 million we raised last time. This is our second offering, and now trades $1, almost $1.30 above its NAV. And we would expect that to happen here with you all as well. Problem is, it's trading at a premium, and we can call it anytime you want, and we're going to call it at 25, right? It's trading at 26.30. So, actually, there's a chance you call it. Meaning that you're buying it high. Yeah, let me bring it back.
Any other questions before we wrap up? Well, if anybody wants more information on this or think you may want to consider it for your portfolio, Shana, feel free to jot down their names. Anybody's interested in, we'll get in touch with them. So thanks for being here, and we have Chick-fil-A for you.
All right.
So anyone that's going to leave and take their food with them, you can go first and then we'll bring in the rest.